Hello everyone and welcome back to Trade of the Week. This week we're stepping a little away from earnings and the headline trades. We cover those daily anyway. Instead, we're looking at some of the less obvious moves that are just as interesting. Soft commodities, and cocoa is a great place to start. So let's check the technicals. We can see cocoa is trading around $5,450 a ton, pulling back from its recent highs. And it spent 18 months in a brutal free fall from $12,670 down to under $2,900. Then it broke that downtrend. And once it cleared it, momentum, we can see it exploding, running all the way to $6,500. It's the highest since autumn 2025. It is a huge move that needed to cool off. And we have three drivers as well for that: a stronger dollar, ECE inventories at 2-year high, and improving supply. But demand as well isn't collapsing. Europe's soft, but North America and Asia are both beating expectations. And El Nino risk in West Africa keeps the medium-term floor supported. This year's could be one of the most interesting in the last 75 years. Now, on the technical level, we can see Fibonacci zone. That's not random. It's exactly where price consolidated before, and it lines up with the old broken downtrend. That confluence makes this level really important. We would either see fresh buyers defending it, or it's the retest that confirms the next leg. Right now at $5,400, price is still holding comfortably above that zone. Zooming in into the hourly chart, and price is compressing into a clear triangle. We have lower highs. That's usually energy building before a break. A break higher and $6,520 is back in play. A break lower, then we have $4,275 and $4,700 zone becomes the support. Cocoa's compressing before its next move. We need to watch the triangle and watch these levels.